everybody, welcome back. Opendoor Technology. Today really wasn't Opendoor's fault. Housing data came out today and it was pretty good, but the housing stocks didn't move. And I'm about to tell you why. But first, let's look at the chart and then I'm going to explain to you what happened today. So here we are for the weekly chart for Opendoor Technology, and we have 3 red candles for the weekly, but don't be alarmed because look, we had 3 red candles right here too, right? And we still went up. So these 3 red candles doesn't mean too much. And we're not really going down because Opendoor is doing bad. There's a lot of outside noise going on, economic reasons, and the government shutdown issue. That's why we're kind of going down right now. But let me explain to you a little bit more about it in a few seconds. So I think the government shutdown wasn't going on right now. I think we actually have a green candle right here because of today's data. But let's finish looking at the chart and then we'll talk about that. So 3 weekly red candles, but as I said before, we had 3 weekly red candles here and we just pumped up for many weeks, about 5 weeks going straight up. So I'm not too worried about it. The daily chart, we're kind of like midway from the 691 bottom and the 923 top, because right around here closed at 820, after hours 818, but the support I have on here is around $8 and $8.08. Last support that we have on here is $7.55, and then we have the immediate support, which is between $8 and $8.08, and for resistance we have $8.69, $9, and then $9.64 for resistance. And here we go for the housing stocks. ITB ETF for houses. It went down initially and then it came up, but it didn't do too much. It went up a little bit, pretty much where it opened up at. DR Horton had a decent day, and Lennar had okay day. Went down, it came back right back where it opened up at. So the best one out of the 3, I would say DR Horton, and you see the daily chart starting to trend back up. DR Horton looks pretty good. Lennar, let's see, Lennar, same thing, looks good. ITB slowly going back up again, and it doesn't really have that turnaround like we have here on Horton and Lennar. But I think the reason why is because we had a turnaround right here. We had a big turnaround right here, and then we're starting to consolidate down a little bit, and so hopefully we can hold this $8 area. Based on what I'm seeing right now, I think $8 is going to be a strong support, and if not, $7.80 strong support, because it would just take us down about halfway from our reversal area right here, around the $7.80 to $8 area. So I think we should be good between $7.80 and $8 for a strong support. And then we got to see about the data that's coming out tomorrow, and also the government shutdown news, what's going to happen there. I think if the data is fine and the government shutdown doesn't happen, or it's a short government shutdown, I think Opendoor should definitely reverse and start heading back to that $9 again, because the housing stocks are looking decent, but Opendoor hasn't really started to go up yet from the news and the data of the housing industry. So as far as the chart, I'm looking for $7.80 to $8 price channel trade for a strong support until we break that $9 again. That's what I'm looking at for Opendoor. And here's the good data I was talking about. Today at 10 a.m., pending home sales month over month. The previous was negative 0.3%. The forecast was 0.3%, and we got a 4%. That's a big number compared to the 0.3. That's huge. And previous pending home sales year over year, 0.7 previous, actual 3.8%. Once again, that's huge. But Opendoor, like I said, did not move based on this data. The other housing stocks did, but Opendoor didn't really move. Why it didn't move is because we had this big pump right here from 691 to 919, right? And people are either shorting or still profit taking from that 691 to 920 area. And as you can see, we haven't really dropped that much. We have had some red days, but from here to here, we're still like in the middle of the run, the 691 to 920 run. So that's why I'm hoping that we hold this support right here at $8, if not $7.80 to $8, because that would put us right in the middle of the run from 691 to 920. If we can hold this area, consolidate maybe for a day or two, and then we could pump up and break that 870 and then add $9. That's the goal I'm looking for. This is what I mean by the government shutdown hurting the housing stocks. Since the government shutdown would hurt home buying deals just as buyers are coming off the sidelines. So aspiring homeowners applying for government-backed mortgages and for flood insurance may face sudden delays if the government were to shut down. So that kind of held the housing stocks down. But, that's going to be temporarily. The government not going to be closed forever. If it does close, they haven't closed yet. If it does close, it's going to be temporary. And then once open back up again, housing market stocks should go up. And here's a quick article. It says, how does the government shutdown affect real estate? During a lapse of authority, the NFIP cannot sell new or renewal insurance policies. Here's another one. Rural housing programs. Under a shutdown, the U.S. Department of Agriculture will halt issuance of new direct and guaranteed home loans, and any scheduled direct loan closings will be postponed. So pretty much delayed. Veteran Affairs. The Department of Veteran Affairs will continue to guarantee home loans during a government shutdown, and lenders may keep processing applications. However, some VA staff and support functions may be reduced, which may slow down approvals, appraisals, and certificate of eligibility requests. So pretty much it's not a permanent thing. It's just something that's going to delay the progress of the housing market. Slow it down a little bit. But it's nothing huge, nothing big. So if anything, I think housing stocks should maybe trade sideways or maybe come up a little bit or go down a little bit. But I don't see like a big dump because of this news, because it's only going to be a temporary obstacle for housing stocks. Opendoor, Horton, and Lennar pretty much. As you can see, Lennar went up even though the government shutdown could possibly affect them. It still went up because it's only temporary, right? And here's another thing I noticed. Today and Friday, we had very, very low volume. I think we haven't had this lower volume since sometime in looked like August. August. Last time we had this lower volume was all the way back in August. So not a lot of buying, not a lot of selling. Not a good thing and not a bad thing. That's a neutral. Just because it's low volume doesn't mean it's a bad thing. It just means that there's some indecision on what to do next. Should we keep buying or should we just hold at the current price? Now, if we get some bad news, yeah, it could go down lower. But on the current status of Opendoor in the housing industry, we're pretty good in the $7.50 to $8 area based on how low the volume is. If you had a lot of volume and the stock was moving down, people are profit taking and selling. But since the volume is so low, they don't want to sell at this price. But at the same time, no one's buying. So we're at an indecision phase right here. And we're probably going to consolidate between $7.50 and $8 if we go down lower. So hopefully you hold it $8, and the resistance that we need to break for tomorrow is going to be $8.55. If we break $8.55 and hold it, that's good, because the recent support was $8.50. So that's where we need to go back to the $8.50. Once we're at the $8.50 again, we need to break that $8.70, $75, and then the $9 area. That's what we need to do. All right, everybody, thanks for watching. Don't forget to like, comment if you have any questions, and subscribe. And like I said before, very soon I'm going to start doing videos on different stocks as well. Low price stocks and probably some high price stocks. A little bit of both. So subscribe and you'll never miss any video. Take care.